Welcome traders, this is Venderman with FuturestraderElite, and in today's episode we are going to be talking about why traders hold losers too long and how to fix that. So, excuse me, we're going to pull this chart up, blow it up here where we can see it. Now, most traders don't blow accounts because of bad entries. They usually blow them because they hold losers way longer than structure allows them. So in this video, I'm going to show you the exact moment structure tells you to cut long before the pain hits. So traders, they'll hold losers because they want to be right. It's just, it's common for a trader to feel that way. It's not because structure supports the trade. They don't want to be wrong about the trade. The chart might be telling you to cut it, but your emotions override that. And so, excuse me, we're going to look at this here, back this up here, and right here, this is a 1 minute chart. We got a clear structure break right here. We come down, we found a bottom coming up, and this is the break of structure right here. You got this green candle come up, and now if you're a newer trader, you should be playing the retest anyway, not the actual break. But say you bought the break, and then you get up into this area, and you're into this break of structure area right here, and you see it's having a little trouble. So typically, if you're going to take a trade and it's a 1-to-1, or you're following it with a stop, or you set a take profit, your take profit should have been set up here at this break of structure anyway, which would have triggered. But let's say it wasn't. And now this turns and goes against you. So say you're in a trade, you got in here, and your emotions are telling you it starts dropping, you're not out, you're thinking, oh, this is going to push up here, it's going to push. And you got to understand that if you didn't set your take profit there and it trigger, how long are you going to sit here and hold this and hope, thinking it's going to go that way? So as soon as this turned right here and started doing this chop, your stop should have been moved to break even. On this move, your stop should have been moved to this line right here, anywhere where this break of structure was, because when we get over here, this breaks this structure back to the downside. Now, if you entered here on this break of structure and you didn't sell up here, and you just keep telling yourself it's going to go my way, it's going to go my way, this is your out right here. There's no reason to let emotions be involved. You should have had a stop right here and stop at break even. No questions asked, or even, I mean, this candle would have got you right here with that wick, but it would have saved you from all this right here thinking, okay, so how long am I going to hold? And I know there's a lot of, I've done it myself. I know there's a lot of traders out there that do it, and then they see this and they get excited and think it's going up here, and then it just chops and on down we go. So you got to know when to cut them. You cannot just keep holding it. The trade was dead as soon as it got back to this spot right here. Not 5 points lower here or 5 points lower here. That trade was dead as soon as it rebroke this structure that you took the trade on. Now, a lot of people, you know, they get in hope mode, which we just discussed, or they're anchored to the entry price, and their mentality is like, it'll come back, it'll come back. I know you guys know what I'm talking about. I've lived it myself. I'm a full-time trader, so you know, you gotta, I have my bias. I do pre-market prep and every morning and have ideas, but people get behind a computer and they freeze. They don't go by their bias. You're supposed to be flexible the whole time that chart's moving, and all of a sudden you tense up and it's like inflexibility. You can't move, you can't do anything. You got to be able to adjust with the chart when the chart adjusts, and keep your emotions completely out of it. That's the whole reason we discuss structure and ideas. and you have to stick to that, and if it's not going your way, you cannot get emotionally trapped into the trade, knowing that while you're looking at the chart, that you should just cut your loss. And then, of course, a lot of people just position way too big, and that it just emotionally traps them automatically. If you go in too heavy, it don't take very, very far for it to go against you, and you're in the red pretty good. And then some people can't even hold through the red without getting real emotional. And until you take some big losses in the stock market, it'll be harder to understand. Once you've been hit hard enough and humbled enough by the market, it'll teach you a whole lot of lessons about emotion and things to overcome on the day-to-day basis with trading. You got to be able to identify the first invalidation level with every trade, though. If a break of structure breaks against you, you're wrong. If the momentum shifts against you, you're wrong. If a price can't reclaim a zone you took a trade from, you need to cut it. Now, what that means is, so if you take a trade from a zone, okay, and say you took this trade, let's say you took a trade out of this zone right here, and you didn't get rid of it up here, and then we drop back into the zone here. Well, you had a second chance. Well, shame on you if you didn't get out on this one. Say you took the break of the zone and you didn't sell in the next zone, and it come back to this zone. Shame on you if you didn't get out on this one here, because then you had to deal with this. And this is the emotional roller coaster that a lot of traders deal with, is this right here. Say that we broke this zone, we're playing the break of this zone, and our target's going to be this zone. Well, this is a whole lot of consolidation, and looks like structure breaking here. It wants to break this, and you think, oh, it's going to go up here, maybe test this structure and on. Well, it comes down to this zone, and then your emotions kick in because you was 200, 300 in the green up here, 500, 1,000, however much it was. Now all of a sudden you're in the red because you took the break. So now that you're in the zone, you're in the red, and 100%. 3 minutes later, your emotions are already in control of the trade, and then this candle opens and boosts up, and you start feeling a little bit better. And then this one boosts up, you start feeling a little better. Then you get this huge spike, and guess what? You didn't sell, but you're already feeling better. And then it sucks down real fast, opens up, and straight down, back into the red. That is a heavy emotional roller coaster, especially if you're positioned too big. So then it's shame on us as traders. We didn't get out, but what do you do if this happens right here? Do you hold and hope? Think, oh, what, it tested again, maybe we're going to get this jump again. If you're holding and hoping, you see how this played out. So what you got to do is, if you took this trade at the break of this box and this happened and you still held through that, and this was coming back down here, you are completely in the wrong if your stop is anywhere further than the bottom of this box. So, you should have most definitely had your stop placed, like just to the bottom side of that your zone, or whatever your zone is, just to the underside of it. So this wouldn't have wicked you out. That would have still gave you opportunity for another drive up, but as soon as this one did, you're out. Emotional roller coaster is over, because I took the trade here. I'm not, if you're looking at this, you got to tell yourself, if we break out of the bottom of this box and we take out this structure right here, you're looking right here and you say, oh, look at this. If we take this structure out, we're going down even further. So we break it, bounces a little bit, and then we break it. And as soon as you break this structure right here, you got to look at this structure and say, hey, if we break this structure, we're going down. You know, if the bias is down, if the market's been pop and drop, then you should be able to tell yourself, we break this structure, we're going down. And so on, so on. So you should automatically know, hey, I don't want to be in this past this box. And, you know, if structure breaks and momentum confirms going against you, you got to cut it every time. There's no debate about it. You got to be able to play some stops within structure, and keep your losses small. That's what's going to keep you in the game the longest. So there's no hype in this. You know, this is about being consistent with every trade. Trade the structure and not your emotions. I'll see you guys in the next episode, and it'll be in the playlist on the channel. Everybody have a great trading week.